Guys, here's something which caught me out of the blue. Swipe, which you might have already known, is already up by 30% in less than a week. And this kind of returns quickly catches attention of us traders because it really didn't have anything to push it up to that mark, right? Like whenever something explodes by up to 30%, it means that there were just too many chain of liquidation which led to that event. And obviously, when it comes to the exchanges and the way they balance the order book, they have to do these kind of stunts in order to keep the market calm. So that is exactly what we saw on this asset class. And guess what, guys? Whenever something shoots up in value by around 30% with no underlying fundamental or technical factor, it means only one thing, and that is instead of following the herd, we need to do the exact opposite, which is take the contradictory view and analyze where the true equilibrium zones are, and that is exactly what we are going to be doing on this video. So I'm going to walk you through all of the important points you need to notice and the exact time frame so that you don't understand things only in terms of technical points, guys, but also along with that you will know exactly what harmonics is all about. And at the same time, guys, I'm going to teach you what both the momentum indicators and the moving averages are suggesting so that you're not working with either one or two indicators. Instead, you are working or combining 2 to 3 trading systems to give the best possible edge in your favor. So that in a nutshell is what we are going to cover, and let us get started with the content. Guys, obviously Swipe or SXP US dollar, as you can see, guys, it mainly got the bullish momentum from the latest support region, which was around the $1.50 mark. And if you notice carefully, guys, the support zone is not something which is temporary in nature. Instead, it is something which has been held for a very long time. And to get the best sense out of the view, guys, you have to just change the time frame to weekly because that is where all the action is occurring. So obviously on the weekly chart, we can clearly see why this support region held. And even if we were to plot out the zones fresh, this is how it looks, guys. Like obviously it has seen better days, but right now on the probability scale, the price is much more likely to go downwards than upward because one, it is clearly in a bearish cycle, and what we saw was a temporary bounce followed by mass liquidation. So majority of the retail side were betting against it near the support zone, and as expected they got burned, but that is what led to this rise, right? But now again, the tides are turning and it becomes much more obvious once I show you exactly what to look at. So on the weekly time frame, what we need to understand with regards to trend is that without any questions, it is towards the downward side. So here are the trend line touches. And of course, you can plug in the moving average right onto the chart or just use MACD so that you kind of get both the input from moving average and momentum indicator. So once applied, guys, this is how it's going to look like. Like if you just notice the peak of the chart, guys, just notice this bounce here around the $4 mark, and at the same time notice the ones around 2.90 or almost $3. Like on the $4 mark, at least the momentum was supporting the trend, but apart from that, even though twice we touched the trend line, the momentum is the same and the moving averages are also still pointing down. So it just suggests that this is just a temporary shock in the market which was led by just a chain of liquidations, as I mentioned above, and there is just really nothing to push the price above the current zones. And even if we get any kind of price movement here in the short term horizon, it is just an opportunity to get more aggressive with a position because there is nothing to fuel the trend. So that is one thing we need to realize. And on the shorter time frame, such as the daily or the 4 you can easily see that the trends have shifted. So these two candles are on the daily rejection pattern, and if you just drop one notch lower, which is the 4-hour time frame, here also you can see the trend not being able to sustain itself, and that is just a sign because that is something which everyone saw coming. And even on the 4-hour chart, guys, just notice the bounce. Even though the market was heading higher and higher, the momentum was gone, and the last one to change was the moving average along with the trend. So to make things easier, guys, all I'm trying to say is that on the probability scale, it is much more likely to go down in the near future. And from the current price, the conservative targets would be around $1.75 mark, which is exactly around here in the last resistance zone and from the current price range. Without any kind of leverage, we are talking about at least 15% drop in value. So it's well and good if you manage to make some money being a bull and by being a very fast scalper or a short-term horizon trader. But if you're watching this video, then just like I said, take the contrarian view and understand that this is the most likely scenario. And since the time horizon needed for this trade to get completed is very short, we are going to find answer to our question very soon. So just follow along and tag along, guys, and you'll exactly see what is going to get unfold. And as I've made every parameter known to you ahead of time, it is just going to make the entire process much more easier. So keep an eye on this pair, definitely the one to keep on your watch list. And just like I said, guys, nothing on the fundamental side. And the confidence factor is just unreal. So it's a no-brainer to go short here. If you have any questions about the trading setup, leave a comment below and I will get back to you. And if you want to find more signals like this, then check out the links in the description section below for all the latest updates regarding the market. Subscribe to our channel. See you guys on the next one.